Aditya Shah, who's the founder of Hercules Advisors, joining us on the show. Aditya, morning. Help us with your first take on HCLTech earnings, because we have already seen a bit of a disappointment from TCS. Now HCLTech, no fireworks there as well. What's your analysis?
So the results are very muted. They were expected to be muted across the IT sector. We've seen the US undergoing some bit of slowdown, and because of the slowdown, the entire IT pack is reporting a slowish kind of numbers. I'm not really surprised by what HCL Tech has reported. They have also downgraded a little bit of margin guidance, but upgraded a little bit of growth guidance per se. They have said that the auto sector continues to be a major pain point for the company, and I don't expect the company to recover at least until Q3 or Q4. The second half of the year, Q3 and Q4 is when recovery should come in for the entire IT pack. However, now the valuations are starting to correct from the to a decent level where long-term investors could start to looking for these companies would remain steady compounders per se. So from my perspective, even though the near term does not look good, the longer term looks good for these companies, and you should start to nibble into these companies if you are a long-term investor.
Right, okay, so that's the first take on HCL Tech's numbers from Aditya Shah. But Aditya, hi, morning. This is Nehi also joining in. What are you making of the cut in their EBIT margin guidance from 18 to 19% earlier to 17 to 18% now? How do you think the street is going to react to this EBIT margin cut? Because the management has said that they expect that the problems they faced in quarter one, they could trickle into quarter two as well, basis which the overall FY26 EBIT margin has been cut. How do you believe investors and as well as the stock price could react to this piece of news coming in from them?
So a lot of negatives were built into the stock. Near term, there could be a small bit of downtick, but I think the market will digest this and move on. I think this is temporary lowering down of margins. By Q4 and early next year, the margins will start to recover, and the growth will also slowly and steadily start to come back. So from my perspective, the management is also wanting to move towards higher deals and wanting to compromise on margins per se. So from my perspective, yes, this is a negative in the near term. However, in the longer term, uh, the margins will come back to their original place and should not be a problem. There could be a near-term downtick for the stock, but in the longer term, investors should latch on to the stock. Mind you, HCL Tech is amongst the cheapest amongst all large cap IT pack and has a decent amount of dividend yield. So that continues to remain our topic across the large cap IT space.
Yes, indeed. The dividend yield pick is also something that HCLTech is working with. But thank you so much, Aditya, for taking the time out and speaking with us on HCLTech earnings.